Here are the highest-paying dividend stocks of 2021-2022. 1. SOFI ETF, Weekly Dividends. SOFI has been around since 2011, in 2020 August with its new WKLY ETF. It aims to deliver income at a fast pace, as it's the first equity ETF to pay weekly dividends. WKLY will track the SOFI Sustainable Dividend Index, which the company says, is made up of large and mid-cap companies in both the U.S. and developed international markets that meet a robust set of sustainable dividend filters. This include dividend sustainability payout ratio and debt-to-equity ratio dividend yield. The ETF is actively managed and aims to deliver distributions every Friday. It holds more than 100 different stocks, but the fund's top holdings include familiar names such as Ford and Delta Airlines. With a fair dividend yield of around 2.5% and a weekly payout schedule, it is an attractive fund for those looking for a steady paycheck. 2. Chevron. With oil prices at $74 price level, things are looking good for energy stocks like Chevron Corporation. The oil giant has a dividend yield of more than 5% and its most recent hike was announced in late April. Many investors, including Warren Buffett, love the stock because it has a strong balance sheet and good growth prospects. Although the energy sector isn't in its heyday anymore, Chevron has got a few tricks up its sleeves. The company is also keeping up with the times through its initiatives in hydrogen to support the green economy. 3. AGNC Investment. AGNC Investment Corp is the largest mortgage REIT by market cap. They have made a strong comeback after an underwhelming 2020. For those unfamiliar, the company uses its in-house subsidiaries to help package, buy, and sell government-backed mortgages secured by residential real estate. While mortgage REITs may not be a favorite on Wall Street, there's no question about AGNC's consistent dividend yield. The REIT has an annualized dividend yield of more than 8%. In 2020 alone, the company completed $1.4 billion of capital transactions, having a total portfolio of $96.6 billion in agency mortgage-backed securities, MBS, and to be announced, TBA, securities. If you're an investor in the stock market today, you probably know a thing or two about the rising inflation rate. And rising interest rates are among the reasons why stocks were down. While these are bad for stocks in general, rising interest rates actually benefit AGNC. For this reason, some may see AGNC stock as a defensive play in the highly volatile stock market we are having today. 4. ABBVIE. ABVI majors in the biopharmaceutical industry and one of the best dividend stocks in the stock market right now. ABBV stock investors are benefiting from a dividend yield of 4.5%. ABVI strives to research and deliver innovative medicines. Now, the company's developmental pipeline consists of potential treatments across numerous key therapeutic areas. These include but are not limited to immunology, oncology, virology, and eye care. For a sense of scale, ABVI is currently evaluating over 20 investigational cancer medicines in over 300 clinical trials globally. ABVI is also gathering a lot of investors' attention recently as the company continues to make tremendous breakthroughs. Just this month, ABVI continues to see significant results in its cancer and arthritis portfolios. With a market capitalization of $200 billion, the company has the balance sheet to make strategic acquisitions to further boost its offerings. 5. Realty Income. It's nearly impossible to put up a list of best dividend stocks to buy without Realty Income. That's because there aren't a lot of companies that can pay consistently and raise their dividends regularly. It is also one of those rare companies that pay out monthly dividends and are actually trademarked, the Monthly Dividend Company. It has made 611 monthly dividends consecutively. This steady performance makes it a great staple for an income investor's portfolio. What's making Realty Income a compelling investment is its portfolio of strong clientele. As of June 24, Realty Income owned 6,652 properties with over 119 million square feet of space. With tenants like Walmart and Dollar General under its belt, it should continue to do well and maintain a stable revenue stream. With the COVID-19 restrictions ending and a high vaccination rate, Realty Income's most affected tenants such as cinema operators and gyms should enjoy a nice recovery.